Hello, I'm Russell Gray, co-host of the Real Estate Guys radio show, and we're here for another edition of Boots on the Ground. We're going to be talking about precious metals, and I've got two really, really great guests. I'm so excited. So first of all, we got Brien Lundin, who is the publisher of the Gold Newsletter and the producer of the New Orleans Investment Conference, the oldest running investment conference, what, Brien, in the world?
In the world
In
until
the
proven
world.
otherwise.
Yeah, so we're always there. The real estate guys have been, gosh, it's probably going on a decade. We've been a fixture there and we love it. And that's where we met our other friend. And if you've been watching our channel for any length of time, you know that we have a lot of conversations with Dana Samuelson from American Gold Exchange. Dana, thanks for coming back.
Hi, Russ. Thanks for having me. Thanks for having us.
Yeah. So, I'm sorry. Yeah, I'm all chatty. Excited, super excited to have you guys. Dana, you and I did that epic silver series back in the day. And so, folks, if you just are new to precious metals and you're trying to figure it out, maybe the light bulb is starting to go off and you're like, hey, maybe I should think about this with all this inflation and you really don't know how it all works. I'm going to refer you to that series. It's if you're interested, just send an email to silverseries@realestateguysradio.com. I'm sure the team will put a link in the show notes below, but silver series at realestateguysradio.com. When you're on the list, every time we do an updated episode or you have a question and you want to put it in the Ask Dana category, you can send that and we will be happy to answer the questions. I think it's an area that really is worthy of your study. Precious metals is kind of the canary in the currency coal mine, if you will, as paper currencies tend to lose their value, which means it takes more of them to buy things like houses, rent, gasoline, all the things that, we're experiencing every day out there. That is the currency collapsing. And so your hedge against that, for a lot of people, consider it to be precious metals. So, Brien, I'm going to come to you and just, you're kind of the macro guy. You write the Gold Newsletter. You watch what's going on at the mining level, which is supply. You talk to all the big brains, a lot of the super big brained economic people we hang out with today. We've met through you. What are you seeing going on out there as we're sitting here in late August 2022?
Well, I see that gold drives everything in this space. Okay. It drives silver, it drives the mining stocks, all the associated investments. And so we need to look at gold and where it is and where it's going. As we speak, gold appears to have traced out a kind of a typical summertime bottom. It looks to have bottomed around the third week of July, thereabouts. Up until the last couple of days as we speak, it was dipping back down, seeming to roll over to maybe a double bottom. But the last couple of days, again, as we speak, and subject to change at any moment in these markets, it's enjoyed a couple of days for really not too impressive of fundamental reasons. So, maybe things are back on track in terms of gold recovery from its summertime bottoms. I'm looking toward more the fall, October, November timeframe for gold to really get going on its next rally, because I think that's about the time that the Fed's going to run into some serious headwinds on its rate hiking campaign. And those headwinds primarily in the cost of servicing the debt, which has already started to soar. And those numbers are coming in, they're quarterly. You can look at them on the Federal Reserve's own website, and you can see that the interest payments on the federal debt have just gone hyperbolic. And that only factors in the first rate hike or two, because those are quarterly numbers. Nothing like what we've seen over the last few meetings. So it's going to make headlines, I think, over the next couple of months. And I think that's going to be the next big deal in the markets.
Yeah. So this is really, folks, because I know we're real estate guys. People are like, well, what is all this precious metals talk with the real estate guys? Well, if you borrow dollars, if you earn dollars, if you denominate your balance sheet and your wealth in dollars, and you don't know how to think outside the dollar, and something happens to the dollar, I think common sense says you have some exposure that you might not even be aware of. And so the reason we talk about precious metals is to get you to think outside the dollar. We don't expect you to think about life in terms of yuan, which is the Chinese currency, or yen, which is a Japanese currency, or even Canadian dollars or whatever, but really just learning to think outside of paper currencies. Because when it comes to paper currencies, dollar is king, right? Everybody wants to be in the dollar. And right now, as other currencies are falling faster, people are piling into the dollar, which from a price perspective puts downward pressure on the price of gold and silver. But I've always said, and I covered this at the summit, Dana, I talk about that ship, right? You got the ship of currencies, and in the back of the boat is a Zimbabwe currency, which, by the way, has just gone to a gold-backed currency. Maybe we'll talk about that a little bit. And at the front of the ship, you have the US dollar, which is the world's reserve currency. And as the ship begins to sink, as the currencies begin to fail, everybody's climbing out of the sinking currencies to get into the strong currency. Well, on the side of the boat are these little dinghies called precious metals that are real money. You know, JP Morgan, not the bank, but the man, famously said way back in the day, gold is money. Everything else is just credit. And if you open up your wallet and look at the Federal Reserve notes are debt, right? Everything in our system is debt. So if you want to get out of debt truly, you've got to get into gold. And those are those little lifeboats. And so there's a period of time when the dollar gets temporarily strong compared to other currencies that you can climb into those lifeboats at good prices. And what you're looking for is down the road, there's potentially going to be a collapse of the dollar's purchasing power against gold. And that's when you get that dollar denominated price appreciation. So Brien, you talk a lot about dollars or gold in terms of its dollar price. You guys both know I don't care about the dollar price. If it's low, it's good, because that just means my dollar is strong for being able to accumulate more savings in precious metals. So Dana, you deal with the world at the retail level. And I know you do some great macro presentations, because you did one for us out in Pennsylvania that I just loved, because you showed how all these other things were crashing and gold had really been very stable. But when you deal with people who are coming in, who are either buying or selling gold, trying to protect wealth or take their profits or give up on the asset altogether, what are you seeing out there right now? What's the mood of the market on Main Street?
Well, the public is confused because of inflation and the mixed signals that the economy is given. Most people have not lived in an inflationary environment before. So, and we've seen the stock market, the equities markets take a big tumble, and now we're in a bear market rally that some people think is, maybe a reversion to a bull market, which I don't think is the case. The dollar is abnormally strong because of what you said. The other currencies are failing faster, and we have a interest rate differential here. So we're in a bit of a choppy period in the precious metals activity market. We are seeing some modest distress sellers starting to appear because inflation is eating into people's ability to buy goods and services. So we've seen credit card debt surge over the last couple of months as people have added credit card debt to supplement what inflation is taking away from their dollar purchasing power. And now we're starting to see some distress sellers. With the metals quieter because the dollar being stronger, smart investors are taking advantage of this dip. When we've had a few really big orders come in on this dip that we've been going through since July, but the average investors are a little confused, I think, and not quite sure what to do. So it is some confounding information, but I'm not confident that the economies of the world are going to fare well over the next 3 to 6 months. And I think Brien is absolutely right that at some point in time, the Fed will be forced to pivot and to reduce rates. And when they do, that'll really open up the window for gold and silver to move substantially higher, I think.
Yeah, well, I mean, Brien, you talked about the debt, and sometimes, you hear these wonky terms and concepts, and if you don't live in that world, it kind of goes over people's head. But basically, you've got a government. We just signed a big spending bill, right? We just put a big spending bill, and of course, we're already operating at a deficit. So just imagine that you're a household out there, and you're making $100,000 a year, and you're spending $150,000 a year. Let's just say that. So you're running a $50,000 a year deficit, and then you add more spending to it. Now you have a $200,000 a year expense. And so now you have a $100,000 a year deficit, and you're financing the deficits by borrowing. So you add balances to your credit card. And then meanwhile, the credit card company is starting to go, shoot, we're going to start raising interest rates. And so even carrying the fixed balances causes your expenses to go up. Well, if you're already running a deficit, how are you going to pay those that interest expense. You're going to have to borrow more. And so that's called a death spiral. And you literally consume it. You can only play that game as long as you can go until the credit, until somebody cuts your credit line off. And so the idea with the Fed is the Fed can print as much money as it takes for as long as it takes. And so the credit really doesn't fail. What fails is the currency, or what the credit is denominated in. And I don't know, Brien, I'm putting you on the spot a little bit, but when you think about that, the people you talk with, obviously everybody is concerned about the debt spiral. I think the MMT concept, if you know, of the idea that you can just print as much money as you want, and the litmus test is if the inflation happens. Well, we know inflation's happening, so the litmus test happened. I think people are beginning to think to themselves, hey, maybe the dollar is failing. When some of these big brain people that you talk about, what are they sensing? What are they thinking? Are they thinking that this is sustainable? Do they feel like the Fed can keep raising interest rates? Do they feel like the dollar can survive if they lower interest rates again? What
They don't all feel that way, but you know, Russ, you took the words right out of my mouth with debt spiral. I was just going to add that to the conversation. I was just on a couple of webinars interviews today, and I mentioned that, you know, you're borrowing money to pay off, not you pay off your debt, but to pay off the interest on your debt. So it really is a debt spiral. And if we were in private enterprise, private individuals doing this, we would be quickly shuffled off into bankruptcy. But the government operates by different rules and laws. So it is somewhat immune, but it's not totally immune. And we have to remember that this is the end game of a 50-year cycle for the U.S. government, constantly printing more money, creating more debt, ever lowering interest rates to pay off the debts that it already has, the interest on this debt. So we're kind of in the end game, as it were. And when you say everybody's worried about the debt spiral, that's you, that's me, that's some of the smart people we talk to. But frankly, I don't see that many people worried about that. I don't see anyone using that term in regards to the government outside of our little group and the people that come to the conferences we go to, et cetera. I don't think it's widely appreciated. I really don't. And you are absolutely correct. It gets manifest in the purchasing power of the currency, and that's what loses value. That's the age-old prescription. As long as there's been human civilization, when these types of situations happen, they depreciate the currency. And they have to do that at an ever greater rate. Gold does not react to inflation like, say, oil does and the likes. It doesn't go tick for tick. But what gold reacts to is it's kind of a freak out barometer. When people really get worried about their currency, that's when it makes up for lost time. That's when it even overshoots. And I think we're reaching that point. I think your point is absolutely correct, that when people, it gets manifest in the currency, when people start to worry about what that currency is going to be worth, not 5 years from now, but next week, that's when people move to gold. And that's why I think we're really beginning that process right now. I think we've got a multi-year secular bull market in the metals right ahead of us.
Which is really, we're in a multi-year secular bear market for the dollar.
Yeah.
Yeah, because that's really what you're saying. And so again, if you're out there and you're collecting dollars, you're earning dollars, you're saving dollars, and you think you're preserving wealth, this is the reason why we advocate for real estate investors to really learn precious metals. It's sure a leading indicator of what's going on, and you can see it at the high level and the low level. We'll talk about that maybe in a little bit. But at the end of the day, you have to have some alternative, some escape, because if you are single point failure with the dollar and the dollar fails for whatever reason, and when you watch gas prices go from $2 to $5, that's the dollar failing. You say, well, that's just supply and demand in oil. Oh yeah. Well, what about food?
Yeah.
You know, oh yeah. What about rent? Oh yeah. What about housing? Oh yeah. What about picket? Right? It's everything. The dollar's purchasing power is failing, and Main Street's seeing it. They don't understand it. That's why we do these videos, is to try to get them to understand it. But once you do understand it, hey, there's something wrong here, I might need a plan B. That's really, really what we're talking about. So Oh, go ahead.
Not to confuse people, if they turn on CNBC, all they're going to hear about is the strong dollar. But it's the wrong measure. The dollar index, the dollar is strong versus these other trade currencies. And you come up with the greatest metaphors and analogies in the world.
The parachute.
The parachute, the sinking ship, et cetera. But, they're trying to measure weight with a ruler by using the dollar index to measure the strength of the dollar. The dollar is losing value at, what the government tells us is 9% per year, but we know it's much greater than that.
The CPI, right?
Yeah, it's failing. You're absolutely correct. It's failing in front of us. And it is in a bear market right now when you get inflation at these rates.
Yeah. Well, so on Wall Street and in the halls of the Eccles building, which is where the Fed is in the bank, they're looking at the dollar index, comparing the US dollar to other paper currencies. And that's the parachute thing. So we all jump out of the plane and we're all falling. If the dollar pulls its chute first relative to the currencies, all the other currencies, you look at it and you go, oh, the dollar went up because the other currencies are falling faster. But at the end of the day, everybody's falling. And then you switch over to the ship and you realize, okay, this is what's happening, that these currencies are all failing. And the way you know it in the real world is, okay, on Wall Street, in the halls of the Eccles building, the dollar is going up. But on Main Street, where you actually use the dollar, it's going down. And I don't know about you, but I live on Main Street. And so that's what I care about. And so if I want to preserve my purchasing power, I want to own things that are real. Love real estate, but real estate's not very liquid. The great news about precious metals is it's just another way to hold equity. Dana, I love to do this. The idea is like, if I got equity in a real estate, in a piece of property, I'd rather carry that equity on my balance sheet in the form of precious metals. It's isolated from the liability of owning the property. It's isolated from the risk of foreclosure and losing it. It's isolated from people putting a lien on it. It's much, much more liquid. And if the dollar fails, I can sell it for Canadian dollars, Aussie dollars. I can sell it for euros. I can sell it for yen. I can sell it for any currency that I want. And, among a certain group of people, I can probably even barter with it. And it's really interesting too. And it's just another way to just test how far it's fallen. And by the way, we're recording this August 24th, 2022. So just 9 days ago, August 15th, 2022 was the 51st anniversary of Richard Nixon taking us off the gold standard. And I watched that happen on TV, live TV, when I was a little boy. I watched that happen. I was a coin collector, still am. And I saw that happen. And I watched gold go from $42 an ounce to $850 within just a few years.
Right.
And so if you think about, gold being, we call it 1800 right now. If you had that same level, I don't know what the number would be, but it would be a big number.
20 times.
Yeah, it'd be a big number. But if I wanted to go buy 4 silver quarters from you, Dana, which was $1 of face value, how much is that going to cost me?
$20 right now.
$20. So it cost me 20 Federal Reserve notes, 20 each of $2022 to purchase $1 from 1964.
That's right.
Right. And so you've lost 95% of your purchasing power since 1964. And never in the history of Earth have we gone, I believe it's 97% in terms of lost purchasing power before a currency fails. So when Brien talks about it being the end game, we're getting near that end game. Dana.
Yeah, we're on the edges of it right now, the front of the cycle. Putting this in perspective, our debt in 1994 was $5 trillion. It took us 200 years to get there. And in the last 32 years, we've gone up 6 times our debt to 30 trillion. And that's where the debt spiral really starts. This additional 6 trillion we added in the last 2 years, that is a tipping point for the debt spiral that Brien was talking about. So it's, it brings up the old adage. I don't know who said this, but how did you go bankrupt? Well, slowly at first. And then suddenly everything accelerates.
Yeah, so that was Ernest Hemingway, and The Sun Also Rises.
Right.
And they were a group of young people, and they were trust fund babies. And one guy says, "Oh, how'd you go bankrupt?" He goes, "Well, gradually, and then suddenly."
Yeah,
There's a bunch of little bad decisions that turned into going over the cliff. Brien.
And if you look at another metaphor here. When the water moves most quickly when it's just about to go down the drain, and everything's happening more quickly. You used that number from 1994 on the debt. It's hard to imagine, but at least in debt owned by the public, the federal debt owned by the public is 5 times higher today than it was in 2008, the time of the last financial crisis. So, they're just heaping more and more. And every time there's a crisis, the Fed has to do more than it did the last time because the addict has developed a tolerance to the drug. So it's not that easy. The markets are addicted to easy money. They're addicted to ever easier money. So the next time there's a big hiccup, just wait till you see what the Fed comes up with. I mean, the acronyms they're going to have to invent for new programs are going to boggle
Operation Twist, QE1, QE2, blah, 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 right? Yeah. Yeah. I mean, if you think about it, so just to give you a little context, folks, the Fed's balance sheet was 800 billion. So it's not completely accurate to say this, but if you can just imagine all the money floating around out there, these Federal Reserve notes, call it 800 billion, right? Just, okay. It's not technically, it's not accurate, but just understand that 800 billion. That was going into the great financial crisis in 2008. Coming out of the great financial crisis by 2012, I think it was, the Fed's balance sheet was 4.5 trillion. 4.5 trillion. That's a huge, gigantic increase. If you look at the chart, it was very, very stable for the longest time, and all of a sudden it just took off at hockey stick. Well, then we had COVID, and it went from 4.5 or 4 trillion all the way up to nearly 9. And I don't know where it stands, but it's right up there right now. Yeah. And so that has all leaked out into the economy, and that's why we have inflation. And they tried to call it transitory because they thought it was supply and demand driven, meaning that we just didn't have enough goods and services, and that could be part of it. But they've dropped the term transitory. Nobody's deluding themselves into thinking this is a transitory situation. And so once you realize this is a whole new world, we've got stagflation. Lawrence Yun, who's the chief economist for NAR, just came out, National Association of Realtors, and he said, we've got a recession in housing, but record prices. Okay, that's called stagflation. When you have low economic activity and high prices, that is stagflation. We have stagflation in real estate right now, but it's also in the rest of the economy. And last time they had to jack interest rates up to over 20% to break its back, and it wasn't even as bad as it is right now. I don't see any way that that's going to happen. So it's kind of a no-win situation. So, we can't control anything that's going to happen at the macro, but what we can do at the micro is start to begin to hedge ourselves. So I do want to talk a little bit about supply and demand, both at the premium level, Dana, and also just what's going on with the miners, Brien. Yeah. So maybe let's just go ahead and do that. And I may circle back to another topic I have on my mind, but I want to be mindful of time. So Dana, at the street level, premiums, which is the difference between the spot price of the metal and the actual price you pay. So if I'm going to buy a 1 ounce coin, say of silver, maybe it's $19 an ounce spot price, but I may have to pay $23 or $24 or $25 to buy it. Part of that premium is the cost of manufacturing and distributing. Part of that is scarcity. And so you can tell by the changes in the premium how scarce or abundant metal is. What's going on right now in late August 2022 at the street level based on premiums in gold and silver?
Well, premiums for most silver items are pretty close to normal again. We've had a quiet summer because the metals have been in a lull, and the public tends to chase the metals prices higher, and they don't tend to fundamentally buy when the metals prices get cheap like they are right now. So we've had a lull. We've been able to restock a bit. Products like the British Britannia, the South African silver Krugerrand, the Austrian silver Philharmonic are your lowest premium sovereign minted silver coins right now. They're running about $4.99 to $5.25 over the silver price. Canadian maple leafs are running about $5.99 to $6.25, which is normal in this environment. A little bit, 50 cents too much. But since COVID, we have had much higher premiums. The U.S. Mint is woefully behind in silver eagles and gold eagles. The premiums for those are abnormally high. Silver eagles are going for $12 and $13 over the silver price. And we've been negative selling against them because this premium could collapse at some point in time and you won't get the premium back. So buy the cheaper items. You can buy 100-ounce bars for about $279 to $299 over the silver price if you'd like. So that's normal. In gold, we have normal premiums for Maple Leafs from Canada. Again, Austrian Gold Philharmonics and British Britannias are actually the cheapest product at about $70 over the spot price. Maple Leafs in gold are going for about 5% over. Gold Eagles, the premium's about 7% over right now, which is 2 points too high. So we always shift our clients into where we think the best value is based on what they want to do. So we're pretty normal, but we get another buying wave. This could change pretty quickly. So we have a low price for gold and silver, especially silver's undervalued right now by quite a bit at $19 spot price. Anything under $20.50, under $21 looks dirt cheap to me. In fact, anything under 23 looks cheap to me. So silver's on sale with the gold to silver ratio at about 91.5 to 1 right now. Anything above 90, over 82 means silver's cheap. And that's simply how many ounces of silver it takes to equal an ounce of gold. You divide the gold price by the silver price to get the ratio. So we're in a good point right now for people that want to add to their positions or people who want to get started is what I'm really saying.
Yeah, the spot price is down and the premiums are reasonable. So that's a sale.
Yep.
And the dollar is relatively strong against the metal, but not against other things in the economy that are of real value. And, people are still piling into the dollar. There's a lot of demand for dollars right now because of issues in the bond market. When interest rates go up, bond values go down, and there are trillions and trillions and trillions of dollars of bonds out there on people's balance sheets that are dropping in value as interest rates go up. When that happens, they get margin calls, they have distressed balance sheets, and they have a demand for liquidity. And so they sell things that they can have and like precious metals, for example, and bid on dollars at the higher level. They may sell other things that they have to bid. They can't sell their bonds because the bonds are the problem. So they have to sell other things. And so this creates temporary situation for people who know what's going on to realize, hey, the dollar is temporarily strong because there's a shortage of dollars because of distress in another area of the market, and good quality assets like precious metals are going on sale as a result of it. So there's abundant supply and low price because people are selling and there's low price. And that is a real buying opportunity if you know what you're looking at. So we don't want to get too deep in the weeds on that. It's always good to think about it. But again, go Silver Series at realestateguysradio.com. Brien and I cover that. Just find the episode where we talk about gold silver ratio. We do another episode where we talk about premiums. Are broken up into like 17 different episodes. So you can watch them in pieces and pick up different components. So if some of that went over your head right now when Dana's talking, it's okay. I totally get it. I remember when I was there, hanging out with guys like this has taught me how to understand what's going on and when there's an opportunity. I wanted to get you guys on because I feel like right now gold is cheap and silver at over 90 is ridiculously cheap. And when the premiums aren't reflecting that cheapness, then I feel like there's a real opportunity. So anyway, Brien, what about at the macro level, supply and demand? You've got miners out there producing. We've had some energy issues, but are gold mines producing more or less, or sovereign or central banks buying more, buying less? What's going on supply and demand at the high level?
Yeah, and before I get to that, I do want to make one more add to your comments on the physical metals. For a long time, people have been asking me, when should I buy physical metals, physical gold and silver? And the premiums are so high, I would tell them, well, last year, and it's no help to you now. But the premiums are just out of, skyrocketing right now and really out of reach, and it doesn't make sense. So now is the time to buy. It really is. It's one of those rare things because these are physical items that are manufactured. There are supply. There's not an unlimited supply of them. So when demand waves come in, premiums shoot up. It's a rare occasion when prices are low and premiums are low. So it really is a great buying opportunity.
And one other thing on that, Brien, before you transition into the supply and demand question, for folks to understand is that there's a window of opportunity when the dollar is in demand and the dollar hasn't been completely destroyed because, the Fed at some point probably is going to have to print a lot more. I just don't see any way how they're not going to have to print a lot more. We're running huge deficits. There's a big demand for dollars out there. They're just going to have to print more. And so when that happens, at some point, people are going to wake up and realize, oh my gosh, the dollar's losing value now. Now I need to find some other safe haven. And it's at that point when the rest of the market wakes up and makes their move into precious metals. It's just like with real estate. You don't want to go to where everybody's already figured out is the hot market. You want to get there before everybody figures out it's the hot market. You want to go in the path of progress. And I'm not suggesting that you want to buy the precious metals low and sell it high and end up with dollars in the round trip. You want to divest yourself from dollars and end up with savings that is real. And down the road, I think if I needed it, I would probably not even sell it in any currency. I would just borrow against it in whatever currency was most useful and then invest and make a positive arbitrage, because I'm basically posting collateral. So I treat precious metals like real estate, and I'm going to borrow against the equity in the metals in order to invest it at a profit. If I can borrow at 6, 7, 8% and invest at 10, 12, 20%, I get the upside, or I get to keep the gold and silver on my balance sheet. I don't have to suffer any type of a capital gain. I get to free up the purchasing capital of it in whatever currency I want to use and go make investments. And so that's a different way. Again, I don't think the way a normal precious metals guy does. Brien knows that. I think very differently. And that's why I think this is a lot more applicable for real estate investors. This is the way real estate investors think. This is the way real estate investors think. Precious metals investors are like buy low, sell high, but real estate investors are like build equity, borrow against it, and go invest in a positive arbitrage. A very different game. And we just typically use real estate to do it because it comes along with cash flows, but you can marry the two. So I won't get into those strategies. But again, if you've been with us this long, hopefully you're interested as a viewer. But Brien, talk about the supply and demand side, what you're seeing. Are the miners aggressively finding new gold? Are they producing?
They're producing at about the same rate. They haven't gotten too aggressive on the mergers and acquisitions front. What's happened is that energy prices are high. So when that happens, because it takes a lot of diesel to move those big yellow trucks in the mines, then their operating costs, their production costs rise, so their margins get compressed. But the big miners have been making money hand over fist for a couple of years now. They are their pockets are bulging at this point. They've got a lot of cash. They're certainly not going to go away, so they're not in any real danger. They're tremendously undervalued by the market right now, even though
so if I was a stock guy, you're saying that you think there's some gold producers, not explorers, but just producers right now. There's some good opportunities there.
There are, and I think there are some opportunities in the better juniors, the companies that have resources that are already identified and have some valuations attached to them in terms of economics and the like.
So junior is industry slang. So juniors are people who are exploring, right? They're not producing but they think that they found it and they're going to go develop it. Is that right?
Yeah. It's specifically junior explorers and developers. So they may be just looking for something, drilling and hoping to get a hit, or they may have hit something and they're working to expand a discovery, or they've outlined it to some degree. And throughout this whole spectrum, there's different degrees of risk. You've got the hair on fire junior explorers, tremendous risk. They don't have anything. They're wildcatting. Then you go a little bit more toward the safer end of the spectrum. They found something. The market has some understanding of what the size of that gold or silver resource. And then you have the other end, the really big explorers who are actually making metal. So along that spectrum, everything's undervalued. There is a sweet spot, I think, of some junior explorers / developers where they found something, and you can look at them and see that they're selling for a third to a quarter where they were very recently in a more normal market. So they're really on the clearance rack. So you can buy these companies with commensurate less risk because they have something, and just betting on the market normalizing, not getting in some kind of euphoric uptrend like we hope and expect will happen, but just a normal market, then they should be trading for 3 times where they are right now. So those are real opportunities, I think. where you can get the kind of potential return of a wildcat company that hits a big drill hole. But you can have a lot less risk, and you can feel more confident and safer in these companies because they've already found something.
Do you happen to know where the dollar is at in terms of its historic, I think of the DXY, is it near an all-time high? Is it near an all-time low? Is it somewhere in between?
Not an all-time high, but a multi-year high, about 109 right now.
Yeah, I do.
So,
Back in 2001, the dollar got to about 120 on the DXY. It's been as low as about 88, 87 at the bottom of the cycle that we went through a couple of years ago, and it's about 109 right now, which is higher than it's been in the last 5 or 6 years by a bit, and higher than it was a month ago when gold was $30 or $40 cheaper than it is today.
Yeah. So if you were to take your profits in the dollar, if you will, it would be a good time to sell the dollar in favor of something that is a better value, which would be gold or silver.
Yeah.
Yeah. And so this is the thing. People, in our world, real estate investors don't really pay any attention to this, don't really understand all this. And I just think that it's urgent that real estate investors and anybody who doesn't really understand what this inflation we're all experiencing, people see it, they just don't know what to do. They don't understand what it means. And so I wanted to do this video with you. And the reason we did the Silver Series for our audience, Dana, is because I think it's really important that people begin to pay attention to gold. We've been talking about it for 10 years on the show because after 2008, there was a whole lot of things that I didn't know anything about that I realized my ignorance was expensive. And we started going to the New Orleans Investment Conference and hanging out with Brien. And we finally worked our way into the green room where we get to hang out with all the real big brains. And of course, Dana, you and I become buddies and we talk all the time. Every time I see things going on, I'm like, hey, send me a little of this and send me a little of that. And I love collecting those old coins. I'm not a numismatic guy, but I like digging through the junk silver with my grandson and filling up the coin collecting books and telling him the history. Hey, back in the day, our country used to honor liberty and peace. And today we just put, dead presidents on the money. We honor people over principles. And so I can teach him the history of the country. I can talk to him about the economics of when it turned from being money to being just currency. So many fun things you can do. So I would encourage, if you're a parent out there and you've got children or grandchildren in your life and you're trying to help them learn to care about economics, make it fun. Play cash flow for kids with them. Do coin collecting with them. It doesn't have to be expensive coins. Just buy a junk bag of silver and go dig through, look at some old Ben Franklin $50 and old Walking Liberty quarters and whatnot. It's just a ton of fun. So Dana, I can see you chomping at the bit. I'm going to wind this whole thing down. You got some closing thoughts you want to impart?
Well, people should look at precious metals as a way to save money instead of in dollars. That's as simple as it is. It's an insurance policy also that once you pay the premium for it, you don't have to keep paying the premium like you do with car insurance or life insurance. And especially now in an inflationary time like we're going to be in, and we will be in for a while. There's no quick fix for this inflation that we're in because it's their supply chain issues as much as there are too much money chasing after too few goods. So it's a double-edged sword, inflation. It's going to be a while before we're out of it. Gold and silver at some point in time will be worth much more relative to the dollar than they are right now. And people will be happy that they have something that is sound money, number one, and number two, that's really liquid when they do want to pivot into something like real estate when prices drop, which they could over the next couple of years, quite a bit if we go into a real economic downturn, which I think is possible right now.
Yeah, I think if real estate equity and bank accounts, cash in the bank were to get together and make a baby, it would be precious metals. Right? That's the way I look at it, right? So it's like equity on your balance sheet, but it's highly liquid. So if you don't quite understand precious metals, just think of it as like having real estate equity in liquid form sitting on your balance sheet, because that's really the way I think of it. Brien, any closing thoughts?
Yeah, we've talked a bit about the big picture, and just to drill down a little bit toward the near term, I think we're going to come to a crux in a couple of months where the market and the world is going to realize the Fed is essentially impotent. powerless to fight inflation because of the size of the debt. It's different now than it was in Volcker's time. We don't have that ability to really fight inflation. And it's investors are going to have to come to a realization that we're going to be in an environment where we're going to have high inflation, nothing we can do about it. And that is an environment that's perfect for precious metals and associated mining stocks, associated investments in general, and tangible assets. So, so get ready. I think we're coming there to that point within a couple of months now.
Awesome. So Dana, you wrote a report for us that we promote. So I'd love to share that with folks. You can send an email to preciousmetals@realestateguysradio.com, preciousmetals@realestateguysradio.com. It's just a great primer on precious metals investing. Of course, watch the Silver Series that Dana and I did, Silver Series at realestateguysradio.com. And you can come see us all. We're going to all be together in New Orleans in a couple months for the New Orleans Investment Conference. What is this, Brien, the 48th?
48th.
48th. And who's coming? Who are you going to have speaker wise?
We've got Jim Grant, Danielle DiMartino Booth, Jim Rickards, Doug Casey, Dave Collum, George Gammon, Jim Iorio. This is not from memory. I am reading this off. Rick Rule, Dominic Frisbee, Tabby Costa, John Nigerian. The real estate guys will be there, of course. Peter Bookvar, Adrian Day, Jim Stack, and dozens of more. Including Dana Samuelson will be there. It is really, it's a gathering of really elite minds, not just people on the podium, on the stage, but just also the people in the audience are just as valuable. So I tell people, if you want to, the best thing I can say, the best sales argument I can make for coming to the conference is to find somebody that's been there before and just talk to them about it.
Well, we go and keep going, and we love it. In fact, we had Danielle DiMartino Booth at our investor summit. She and her husband and their kids spent a week with us. That was awesome. I got a chance to sit on some panels with her. Got a chance to sit on a panel at last year's New Orleans with Jim Rickards and Danielle. That was a big honor for me. I'm just huge fans. I felt like the little man on the stage, but it was an honor. Really appreciate that. We're excited because I feel like we get to come in there and talk about gold from a little bit different angle, through a real estate investor's lenses. But folks, if you're interested in attending the New Orleans Investment Conference and getting a private invitation to the Real Estate Guys infamous, it's actually probably not going to be a suite party this time. We've gotten too big for that. It might be a balcony party, but whatever party it is, it's going to be great. And it's kind of a who's who. We always invite everybody, and a lot of the big name folks come. It's a great chance to meet and mingle. Just send an email to New Orleans at realestateguysradio.com. So New Orleans at realestateguysradio.com for information about the New Orleans Investment Conference and an invite to the Real Estate Guys party. If you want to learn more about precious metals, send an email to preciousmetals at realestateguysradio.com. Get Dana's report or an email to Silver Series at realestateguysradio.com. And you can watch the, 16, 17 episodes. And then if you have questions about anything on this or anything you've seen, send an email. Just let us know. I guess what Ask Dana, I think it is. Ask Dana at realestateguysradio.com, and we'll answer them. Find a way to get us the questions, and we'll do a live Q&A. We're probably over to do that anyway. Excited about it. But guys, thanks so much for being so generous with your time. I always appreciate the conversations that we have. Keep me posted on anything big and breaking. Otherwise, I'm sure I'll talk to you again soon. But if not, I'll see you in New Orleans for sure.
Great. Thank you so much, Russ.
Thanks, gentlemen.